Guys, Toronto pre-construction has hit a wall. Not a slowdown or a soft landing, literally a wall. In the entire GTA, new home sales in 2025 came in at 5,314 for the whole year. December alone posted only 240 total sales. That number is not a typo. And condos, the engine of pre-con, sold only 87 units in December across the whole region. We're talking about a region of 7.5 million people. The historic average is about 28,000 sales a year, and we only had 5,000 for the entire year, which is almost 85% drop compared to average. So if you own a pre-con, if you plan to buy a pre-construction, or if your job depends on pre-construction and construction industry, pay attention to this video, because this is not only about buyers and investors. This hits supply, projects, jobs, and what Toronto will look like in the next few years. When people say pre-con collapse, most people picture price crashing overnight. This cycle looks different. This cycle looks like fewer launches, more projects on pause, and more cancellation and refunds. Builders offering bigger incentives and in some cases cutting prices to find real demand. And behind all of that sits one key problem. The pre-construction business model needs enough sales upfront to fund construction and financing. Based on the financing rules, developers need to sell at least 70 to 75% of their inventory to be able to get the construction financing and start building. When buyers stop buying, the whole pipeline stops. So we're seeing in this chart in December 2025 about 240 sales in GTA. Single family was about 153 and condos were about 87. When we look at 2025 in total, we had about 5,314 sales, single family 3,247, and condos were about 2,067. This is the weakest year in the database Build and Altus track, which spans 45 years. Now look at this chart. Based on this chart, we're seeing the total remaining inventory is about 20,849 units. Condo apartment inventory alone is 15,115 units, and single family lots about 5,734 units. When we look at this chart, that like the inventory by type, because they're sitting at three buckets. There is a pre-con inventory, under construction inventory, and completed standing inventory. When standing inventory rises, builders feel pressure. Then builders start pushing incentives on buyers, right? Like a free property management or like a reduced closing costs. Then they do the repricing, and then sometimes they may pause or cancel new launches, right? If it doesn't make sense. Then buyers sense fear, and then buyers will wait even more. And this loop becomes self-feeding. Build and Altus show benchmark pricing in December 2025 around for single family 1,409,000, down about 9.1% year over year, and for condos about 1,021,235, and that's flat year over year. So when we look at the cost per square foot and unit size, we're seeing that the prices per square foot stays elevated relative to older cycles, while unit sizes move lower versus past high. So essentially, buyers look at monthly payments and not marketing brochure. Investors look at rent versus carrying costs. And when resale prices feel flat or down, the pre-construction confidence drops hard. So the market therefore clears much slower than what we're all used to. And then instead of a fast price reset, we're seeing a serious volume reset. That's what these sales numbers show, right? There's literally nothing is moving. Sometimes builder can't drop prices too much because their cost is already high, with over 30% of their cost is government taxes and fees. So why condo pre-con took the biggest hit? Condos rely more on investor demand than low-rise properties. Investors' math got squeezed from multiple sides. Higher borrowing costs, tighter qualification, rents not rising fast enough to cover payments in many cases, and we're seeing a lot of inventory hitting the market, and that's not helping the rent prices. Also, resale prices not rising, so the flip later story died. A lot of investors used to assign their contracts or close and sell, but at the higher price. But now we're seeing a lot of investors have to hold on to the property or put more money down to be able to close it, as prices gap between resale and pre-con is widened. This lines up with the split in the data that we're seeing, that literally there's no condo sales happening. We're also seeing the small incentives do not move units anymore. There's the real price moves and real price cut move units. And some builders are choosing cancellation and refunds rather than dragging buyers through years of delays. And that's again brings down the total volume of sales compared to what we're used to. This topic turns the real estate drama into actual Toronto economy. When we look at this condo development cycles and how it's impacting Toronto economy, pre-construction sales feed housing starts. Housing starts feed construction, and construction activity feeds job. There are tons of jobs related to this market, from the planner and the planning stages, the architects, engineering consultants, to all construction trades, suppliers, different concrete plants, steel plants, and the drivers, and etc. The prolonged slump threatens tens of thousands of construction jobs and billions in pipeline investment. Based on some research, up to 41,000 jobs across the local economy sit at risk. And even if demand returns later, a slow sales period now means much fewer starts. And fewer start means fewer completion later. And Toronto, we know, already runs short on housing supply. So a deep freeze in a pre-con today sets up a shortage later, and we're gonna see pressure on prices and rent prices in a couple of years, as there will be no new units coming onto the market. So what does this mean for you, buyers, owners, investors, and sellers? If you plan to buy pre-con, focus on risk management, not hype. Look at builders' track record, financing terms, and closing risks. Make sure you're planning on closing the unit and not thinking of that you're going to be assigning it later. Go through your financing now. Look at the pricing relative to the resale, not relative to the last year's launch price. This one's big because you gotta see what's the price premium you're paying and think about the closing. If you own pre-con and closing is arriving soon, prepare early. Talk to a mortgage broker early. Review appraisal risk and build a plan for extra cash if needed. There are some builders that work with some lenders that provide blanket appraisals. So you get appraisal based on the purchase price and not the market value, which helps you close, right? And then you can then just slowly pay off the mortgage later on. Again, you gotta get qualified for it, so you make sure you start looking at these options early. If you work in construction or your business touches development, watch sales and starts, not headlines only. Right now, sales numbers, we're looking at like 5,300 for the year and 240 for the December. This is gonna signal pipeline pressure. So might not be that much construction going on in future for high-rise buildings. And this ties that pressure directly to construction activity and employment. And if you watch Toronto housing long term, remember this. A market with no new launches today turns into a tighter supply story later. And this cycle hurts now, then creates the setup for the next cycle later and essentially next boom. The timing depends on the rates, policy, and the market conditions.